Judy Copenbarger here. Welcome. Doesn't it seem like tax season's always just around the corner? Often misunderstood is how much you could actually expect to pay based on the income that you've earned this year. So together, let's discover exactly how much you'll have to pay. Ready? So how much income tax will you have to pay? Don't fall for rumors this tax season and believe that you can simply make below a certain amount to avoid the next tax bracket. Today, we're going to answer the question, what is my tax bracket? What is your tax bracket? And we're going to help you understand our progressive tax system as well as you can. And then you're going to know how much you have to pay this year. By the way, before we jump in, make sure you watch our first video on taxes called Taxes, the Basics of Federal Income Tax. That'll help you learn about important tax decisions, like which deductions are right for you. Major tax reforms in 2018 resulted in lowered tax rates in 2019. This year, we are again seeing an increase in the amount of the standard deduction, as well as the amount of income allowed before being moved into the next tax bracket. What does that all mean? Here's something I want you to understand. You're not that person just placed in a higher tax bracket because you make a certain amount of money. Only the money that falls into the higher tax bracket is taxed at that new higher rate. For example, if you're filing taxes in April 2021 for the 2020 tax season, you're filing as a single and you make $40,225. Because the next higher rate of 22% begins at $40,125, only that $100 is taxed at that 22%. Only $100, do you get it? That's awesome news for you. Not every dollar is taxed at the higher bracket, only the dollars that slip over that threshold. Keep that in mind. You'll also hear that this form of tax is mentioned as marginal tax rates. You can get an idea of how much money you'll have after taxes by remembering to calculate for each tax bracket. With this method, you want to start with the lowest income margin. Let's see what you could expect to pay for the 2020 tax season. First, let's start with the standard deduction. You'll see here that for those people filing as single, your deduction has increased by $200 and is now $12,400. So look over the numbers, and then you can decide if the standard deduction is right for you. You might even be able to save more on itemized deductions such as mortgage payments and business expenses. If so, you'll itemize those on a special tax form. Now let's take a look at the federal income tax brackets for 2020. So the maximum amount in each bracket has increased, and the highest tax bracket remains at 37%. Your tax bracket is the highest rate that affects your amount of income. That's going to be your number. So be sure to pause this video while you're determining your tax situation, and then we'll continue. So we've learned today that you aren't really saving on taxes by making less income, right? If you really want to save on taxes, start preparing for the next tax season early. Okay, did you do it? If you didn't do it, go do it. Once you have determined what your tax bracket is, we'll continue. Now you've done it. Doesn't that feel good? So today, what we're discovering is that you aren't really saving on taxes by making less income. If you really want to save on taxes, start preparing now for your next tax season. Do it early. Here are some things to think about. Consider contributing the maximum amount to your tax-advantaged accounts. This would include things like your 403(b) at work, your 501c3, your 457. If you have a 401k, this year you can put $19,500 away. That's $500 more than last year. And in your IRA, your individual retirement account, which you could put $6,000 in, if you're 50 years or older, you can even add another $1,000 for $7,000 this year. Look at all the programs you have available and make sure you're contributing. If you have a HSA, a health savings account available, this year you can put in $3,550 without having to pay tax on that, and double it if you're married. It's a household cap. It's an awesome thing to do. Second thing to consider is keep your tax record organized and prepared. Keep track of your medical, business, and mortgage expenses. Any donations, student loans, tuition fees, as well as child care and state and local taxes should be considered for credits and for deductions against your income tax this year. Every one of these expenses can be deducted next year on your itemized deduction. So the better prepared you are, the more money you can save. All of these expenses can be deducted next year on your itemized deductions. So the better prepared you are, the more money you can save. I know by now you're probably feeling better prepared to handle your taxes and maybe even a little excited because you learned a few new ways to save. Is there anything you still find confusing about your taxes? Let me know. The way that you can let me know is by making a comment below, and make sure to like this video if you found it helpful. Subscribe to the channel for more on your personal financial education, and join me next time. We'll continue your journey together. Until then, I'm Judy Copenbarger. God bless.